Hey folks, Dan Bird here with the Daily Scan for Wednesday, the 12th of November. And the Bulls and the Bears are duking it out. They're staring each other down eye to eye. Neither one wants to give up any ground. And the market is pretty much static right now. We'll take a look at it in a second. I'm not a financial planner, so all of this is for educational purposes only. Before I go any further, I want to thank David Keller for mentioning me on his show. It's one that I recommend everyone check out. He brought up my semiconductor chart. This is the show that this is his market misbehaviors, his site. Chart this with David Keller. He does this. He tries to do it every day, but usually after the close. There's some overlap in the things that we look at naturally because everybody's looking at the same charts, although everyone may have different interpretations. But he has a really good site. He's been doing it for a long time. He's a great chartist. He's a CMT, which I am not, by the way. But I encourage you to check him out. He mentioned me in his November 10th show at about 19 minutes. But all of his shows are really good. So I encourage you to give him a try. Let's go back to take a look at today's movement. It is 11:37 a.m. on the East Coast right now. So we'll take a look at the 10-minute charts and see what the market's doing, if anything. Today, the S&P, of course, basically not doing much of anything. It's basically right where it closed yesterday, pretty much exactly where it closed yesterday. So pretty much moving sideways, not doing too much. Money flow is a little bit negative right now. On the 10-minute, see technology is flat, discretionary is down, communications is down. So the aggressive sectors are basically not doing much, which implies maybe there's rotation into the defensive. So let's take a look at those. Well, the defensive sectors are pretty flat too. They're not really doing anything either. So nobody wants to move money to anywhere. They're just basically sitting on their hands right now. Financials had a little bit of a gain. Financials, healthcare, industrials. This is where most of the action is today. These top four. Energy's down slightly, but materials is gold. Gold is perking up again. I'm going to talk about gold here in a minute. Industrials, healthcare, and financials all starting to move higher. Rotation, you see here, growth versus value. So the rotation is slightly out of growth and into value and slightly out of discretionary and into staples. Technology is pretty much flat. Semiconductors is perking up a little bit. And transports versus the industrials is flat today as well. Here's the breadth. Breadth is actually looking better for the S&P, above the 50% line on all of these. So stocks above their 20, 50, and 200 are all above 50%. The ones above the 50-day is at 52% right now. And bullish percent index is starting to move higher too. So that looks positive. The Russell 2000 mid and small caps is actually looks worse, a little bit worse than the S&P, although it's sitting right on yesterday's close as well. It started off pretty strong. It started off stronger than the S&P this morning, but now it's pulled back quite a bit. So here you can see that big spike. This is small caps, small and mid caps, basically the Russell 2000 versus large caps in the S&P. Mid caps versus large caps is a little bit better. Small caps is a little bit better as well. So that's really where some of the money looks like it's rotating to, small and mid caps right now. And breadth for these, other than the 50-day, it's not quite above 50% yet. So it's still at 46, almost 47% for mid caps, and the same thing for small caps. Looks very similar. And then the NASDAQ 100, also very similar. Here's Monday's open. Here's yesterday's close. Just staying right in between those two channels. Money flow is slightly negative today, so not really much going on. The up volume minus down volume for the NASDAQ. Volume is down, and basically this is flat too. It's sitting right on the zero line. So I don't even want to say that there's more decliners because they're really right on zero. So everything is pretty much static, not doing much of anything. The VIX, you can see over here in the blown up section, is down slightly today after getting up here, hitting up above 18. It's down right now at 17.76. So still a little above 17, but it's right in that neutral zone right now. And the breadth for the NASDAQ, it looks a little bit worse than the S&P. Percent above the 20-day is still at 42%. It is above 50. It's at 51% for the 50-day and at 55% for the 200. Bullish percent index is starting to move higher too. So a little bit of positive movement, and it is above the 21, but just basically going sideways. The whole market right now is just treading water. I don't know if it's waiting for NVIDIA next week before it makes a move one way or the other. That could be. So that's pretty much what it looks like right now. Let's take a look at, I want to look at a couple of things. How do I want to do this? I want to first talk about gold. So here's what gold looks like. This is a daily chart going back a year and a half. And the reason I'm going to do this is because someone asked on Dave Keller's session on November 10th. He showed the gold chart and he put in a Fibonacci level. And I'll show you how he did that. So here in stock charts, just going to annotate right over here, these curved lines right here is Fibonacci. So it's a Fibonacci retracement. And he started it right here at this low right here and ran it up there. Now, one little trick, if you hold the control key down in stock charts, it's going to give you one more line right there, the 23% line. So that's what I like to do. So that's sitting right there. And what he said was, you see, it came right down to the 38% level and then bounced and started to move higher. Now, sure, that's easy to see when you do it in retrospect. So you don't know when you, certainly you can use this as the low and draw it up to the high after a pullback. And you might have done it here and it pulled back a little bit to the 23 level and then it pulled back to the 38, but you don't know if that's where it's going to bounce from. You don't know if it's going to drop through that and head down to the 50 or the 61 or all the way back down to 100. You don't know until it happens. So, but they are just levels to be aware of and to know that something could be happening at that particular area, because all the other technical analysts out there are looking at Fibonacci levels as well. So that's the reason technical analysis works, is because everyone else is looking at the same stuff. So the question was, why did you pick this low to draw the line from? The low in May. Why not pick the low in April or the low in March, or go back here to the beginning of the year or November? Why pick this particular low? Which is a really valid question. It's one of the things about Fibonacci that is very subjective. So people may pick different areas to draw the levels from. But the important thing is to pick a low that is an important low, something that has meaning. And what I've noticed right away, and for those that have heard me talk before, you know that I am a proponent of Darvis. I encourage you to read his book. So this is a Darvis box. Once you read the book, you'll pick them out very quickly. So that is a Darvis box right there. So what Darvis would do, he noticed that stocks or indexes would consolidate for a while, then they'd break out, they move up, and then they would consolidate again. And he wanted to see whether they were strong enough to break out of that consolidation. So the breakout came right here as it broke out through the top of this box this very next day. This is the point where Darvis would be buying right there. He actually would be buying probably all the way through here, wait for a box, buy again when it breaks out. In fact, there's a Darvis box right here for those that can see these now. There is a Darvis box right there. So he would have bought right here and then watched it go up, waited for a consolidation, and draw his box around the highs and the lows. So that's the reason that this low is important, because it's the low of a long consolidation. And you don't know if this gold is going to continue to go higher until it breaks out above this consolidation. So that's why this level is important. And that's the reason to pick it to draw your Fibonacci levels. Now, yes, you could draw it from here. You could draw it from here. Those are not as important. Those are just normal pullbacks. This Darvas box down here, though, is an important one. So you could draw a Fibonacci level from this particular area. And this is what I like to do with Fibonacci. I like to draw multiple lines. And I'll hold the control key down again and give me that extra line. And go back up here to the top. And in this case, I'm going to make this red. All right, so there's the red Fibonacci. And notice in this case, it drew a line almost at exactly the same area, not precisely, but in general, these are areas. They are not exact numbers. So the important thing is draw your Fibonacci level from an important low. And then I do it twice. I like to do at least 2 different lows and maybe even 3. So by doing 2 lows, you can see there's consolidation right here at that same 38% level. In this case, it's the 23 level. 38 is down here, which also is close to the 61. So there's some support down in this area as well. We could also draw a third one if we wanted to from the lows all the way back here in 2024 and draw that one up to the top like so. Let's make that one green. Well, let's make it green. All right, so there's the green Fibonacci. Oops, what I forgot to do is to hold the control key down. So let's go back here, pick this one, and there's with the control key down, it gave me this one extra line right there. So now what you'll notice is all 3 of these now are consolidating right in that same area. So now you know that is a really important area because 3 different Fibonacci's drawn from 3 important lows, not just a regular pullback low, but from 3 important lows, give us roughly the same general area right here. So that's the reason that he chose this particular low. I just wanted to point that out and explain that a little bit better. For those that are interested in Fibonacci, if you have any questions about that, I did a whole Technical Tuesday on Fibonacci a couple of months ago. You can go back and look in the playlist. There should be one in there for Fibonacci. So that kind of answers that question from Dave Keller's channel. If anybody from that channel is watching this one, now you know why this was the area that was chosen. All right, the other thing I want to look at, I want to go here and do the market carpet just to see what's happening for the day. We've got some reds over here. NVIDIA, Apple, Microsoft are red. Broadcom has turned green. AMD is the #1 performer over here. And United Healthcare is doing really well today as well. Chipotle is making a comeback, looks like. But you can see discretionary, there's red in Tesla, Amazon, Home Depot, Oracle is red. The greens are AMD, which is the best performer. Palantir is red still. Financials looks pretty good. That's all green. Real estate and energy are the 2 reddest ones right now. So that's what the market carpet looks like. Go to the dashboard. Take a look at equities. The Dow is up, but the NASDAQ 100 is down. S&P is down slightly as well. Bonds, 10-year is down, back down to 4.05. So the 20-year is up, and the US dollar is down, back down. It started off high and then came back down. Commodities gold is moving higher again. So gold is continuing its uptrend. Oil is down today. That's actually good for the market. And then on crypto, Bitcoin now is at 101.5. It's going back to that 100 level. Remember, the 99,000 level is really, really important support. So if you didn't listen or you weren't watching yesterday, I'll show you right here on the daily chart. You can see right here, these 3 hit there 3 in a row at almost exactly the same tick. So that is really important support right there at about 99,000. So if we come back down and break through it, then that will be important, probably headed to 80,000 if that happens. But if we come down to it and bounce higher, then that will be 4 times that has tested that 99,000 level. And that may end up being very strong support, but it needs to change its character. So you can see the lower highs that it's putting in right now. And it looks like it's starting another lower high right at the 21. So the 21 is really important. It needs to break through that, needs to get above the 50, basically needs to get above 110 before it's changed character back into a bullish trend. Right now, it is still in a bearish trend. So keep an eye on Bitcoin. Let's go down here and look at the sector summary. Healthcare, materials, financials are at the top. And technology and staples side by side, right in the middle. And at the bottom is energy, communication services, and discretionary. 2 of the aggressive sectors are at the bottom of the list down here. And notice over here that the worst performer is large cap growth. And that's where all of those big large cap tech names reside. And the best performer is down here in small cap value. So it looks like there is rotation out of growth and into value, which I showed before. Cisco reports tonight after the close, so keep an eye on that. Applied Materials reports tomorrow after the close, and then NVIDIA and Palo Alto are next week. That's going to be a really important one. Over here are this is my momentum watch list. These are the top 10. AMD number 2. Interestingly, Bill.com is number 1, although had a really nice move higher. It looks like earnings probably. Now it is a shooting star candle, which may be a reversal. So be careful for that. But AMD is looking really strong, getting ready to break out to a new high, actually. Gold, of course, has been doing really well. Look at AU, just continuing to go up. Aklo is back up on this list, although it's been selling off significantly. Here's another gold stock right here. Albemarle is a materials stock. Let's go to the second level and see if there's anything. UNH, United Healthcare, is making a comeback after a downtrend. Moved from 380 down to 320. It's now back to 340. So starting to move back higher again. Another gold stock, KGC. Let's look at the bottom of the list and see what we have here. NBIS. This one had been doing really well. This was a data center stock. Next Tracker had been doing really well. A big red candle today. Go one more down, and we've got a bunch of quantum stocks that are giving it back now. Rigetti moving lower. Qubits moving lower. Here's a crypto mining company moving lower. Here's Cypher, which I talked about before. That one is definitely moving lower. It's down to 17, almost $17 now. So it's looking like a falling knife. Clean Spark, rather. Another crypto name. One more down, and we've got Palantir down here. Palantir starting to move lower. Another quantum stock. So all the quantum stocks are moving lower. Riot is a crypto miner. It's moving lower. So here's Rare Earth. MP had been doing really well up until October, middle of October, and now it hit 100, and now it's down to 58. It's given back almost half. IREN is also a data center stock, and it is moving down, similar to Cypher. So all of the ones that were basically meme stocks are giving a lot of their gains back. If we look at them side by side, the S&P had a gap higher, and now it is moving lower. Big red candle. The Russell 2000 has a shooting star, and Bitcoin looks similar to the S&P. They're very correlated. So that's one comment. Somebody asked if I still thought that Bitcoin was in a 4-year cycle and that 26 would be one of the down years for the cycle. I want to reiterate, I've talked about this before, Bitcoin and the S&P and the NASDAQ are highly correlated. So you cannot separate the two anymore. You can't say that Bitcoin is in a 4-year cycle. Or if you do say that, you have to also say that the NASDAQ 100 is in a 4-year cycle, because they are highly correlated now. What one does, the other will do. I believe, and I'll look up some data on this. I'm sure that Stock Traders Almanac has it. Actually, this is where I saw it. The the second full year of a presidential cycle, which is next year, 26. And usually the midterm election year is usually the worst of the 4-year cycle. So we probably will have a pullback. I don't know when it will begin. I still think that we're going to head higher into the end of the year. We're going to hit 7,000 on the S&P. But then sometime in mid-January, I think the market's going to start going down, and 26 might be a bearish year in general, because it usually is for that particular the election cycle year. So lots of things are coming together to make 26 look like probably a bearish year, but it does not mean that the overall secular bull is over by any means. We can have a downtrend and still maintain the secular bull. I'll show you here on the website on the homepage. This is very important. When do secular markets end? This is the secular bull right here. Began in 2013. They usually run 18 to 20 years. So we've got till 2029 to 2033, somewhere in that area. So, and you see right here is 22. This is the 22 bear market, never went below the 200-week moving average. Even COVID, although it traded below the 200, it never closed below the 200. This is a monthly, by the way. So the red line is a 200-week, but this is a monthly chart. So it will take a while for this to complete, and we have to wait till the end of the month to see the next level. And right now, everything is really high. It will take a lot for this to move down. So we can easily be in this trend for the next 6 months or so before we even get close to starting to give anything back or starting to transition to a secular bear market, which I don't expect to happen until 29. So yes, we could have a week 26 related to answer the question related to Bitcoin, but you can't just talk about Bitcoin anymore. If you're talking about Bitcoin, you're also talking about the NASDAQ and the S&P. They all are working together now. So anyway, that's hopefully the answer to that question. So let me go back here and look at a couple of stocks. First one is Ethereum. Ethereum is going to look very similar to Bitcoin. Here's Ethereum. In fact, what I'm going to do, notice Ethereum, actually, it didn't come right down exactly like Bitcoin did on these 3 days. Went a little bit higher, so it's a little bit more bullish, but it keeps bouncing down off of the 21, just like Bitcoin is. So between the two, they look very similar. In fact, on stock charts, I can use a gallery view and look at both of them side by side. Bitcoin, comma, dollar, Ethereum, USD. And this will show me the intraday view. Look how similar they look. So we've got Bitcoin on the left, we have Ethereum on the right. Daily view, very similar. The one difference, though, is that Bitcoin is already below its 200-day moving average, whereas Ethereum is sitting right on it. So the Bitcoin chart actually looks a little bit better, a little bit worse than Ethereum. Ethereum looks a little bit better than Bitcoin. But however, they both have the exact same pattern. They both look the same. They go up to the 50-day and get rejected, go up to the 21 twice and get rejected. Right now, they're both bearish configurations. The MACD up here is below 0, so that confirms a downtrend on both of these. For Bitcoin, it went below 0. It did it actually back here in last week of September and did it again back here in August. For Ethereum, it didn't really go below 0 until September right here. So Ethereum actually looks a little bit stronger than Bitcoin, but in general, they look the same. You can see the relative strength is the green line, and the pink line behind it is money flow, which I did a technical Tuesday on this. It's basically the RSI with volume. So just think of it that way. So the pink line, just call the money flow indicator. It's actually just taking an RSI and adding volume. That's what it does. So it will follow along with the RSI. Sometimes it moves earlier, so it's good to watch them both. And then on the weekly, again, you can see they look very similar. However, in this case, Ethereum is a lot more movement with Ethereum. Bitcoin has been very orderly, comes to down to the 50 and bounces higher. It's at the 50 right now. So we'll see if it's going to bounce higher there. Whereas Ethereum keeps moving back and forth, goes pretty far below the 200. In fact, this is a weekly down here. So on the longer term chart, Bitcoin looks better. So anyway, that's my opinion on Ethereum. And then the last one is BMNR. And by the way, this is what this looks like. It's going to be similar to the cryptos. For those that are subscribers on the website, on the charts page, every week I update the top 10 lists down here, and I update the top 3 in each sector. And the reason I'm pointing that out is because BMNR is right here. It is in the top 3 in the technology sector. And it is not new to the list. So it's been on here for a while. If you see something with an asterisk, that means it just made the list this past week, last Friday. So Wayfair just made the list for discretionary. And ASTS just made the list for communication services. And if it's in red, it means it's also in one of the top 3 or top 10 lists over here on the right-hand side. If it's in both the top of its sector and in the top 10, it's in red. So you can see that all the red ones there. So BMNR has been on this list for at least 2 weeks. And I recommend for anybody that's a subscriber, that's what the chart looks like. I would just go to this, just take a look at this and look at the ones that have asterisks. And because that means they just made the list last week. Now this one is heading down. So maybe it might be a time to buy if it gets low enough. Because it's a strong stock. It's in the top 3. Wayfair. Who would have thought Wayfair would make it all the way back? But there's the chart for Wayfair. Wayfair is moving higher right now. What else is what else is new over here? Inbox is new for healthcare, the healthcare sector. So it's all the way up there. I think that's it for new ones. But there are new ones in the top 10 down here too. It's always good to take a look at those, like Light, Lumentum. I think I talked about this one. That has a really nice chart, continues to go higher. So all of these in the top 10 usually are pretty strong stocks. And then I put it all together down here in a CSV file if you want to download it, pull it, all of these that have previously in the past been in the top 10. This is a way to get that list in CSV format and import it into your own platform. I'm going to talk about how to do that with Thinkorswim next Tuesday on Technical Tuesday. All right, that's it for today. Let's real quick go back and take a look and see what's going on. Here is not much. NASDAQ 100 sitting right on Monday's open. So it's not really doing too much at all. Here's Russell 2000 also sitting right on the 50. Here's the S&P. S&P growth versus value, everything still looks the same. Semiconductors had a nice run higher in the morning, starting to turn over a little bit. And these are the cyclicals, which were looking the best. Materials, healthcare, financials. The defensives, pretty much flat. And the aggressives, also pretty much flat. Discretionary perking up slightly, but these are pretty much flat. So the market's not really doing much. It's basically treading water. It's a big battle right now between bulls and bears, trying to figure out which one wants to make it to 7,000 or get rejected. By the way, I think if and when we do get to 7,000, I think we are going to get rejected there. And this is the reason why. If you look here on the market bias matrix at the S&P, I update this every morning. You can see the expected move going into options expiration, which is next Friday, the 21st. So the expected move is the dark solid green line and solid red line, but the dashed green line is the call wall. So the call wall has been consistently at 7,000. Call wall means this is where most of the open interest for call options reside for the S&P. And that means lots of people have bought call options for 7,000. Everybody thinks the market is going to 7,000. That's why I think it's going, once it gets there, I think they're all going to sell. And I think that is probably going to be a significant resistance level. It's a round number. So keep an eye on that if we make it up there by the end of the year, because I don't think it's going to last once we get there. And then the put wall is, think of that as support. Down below, it's at 6,800 right now. So we're a little bit above that. So all of these lines right here are updated every morning, the beginning of the day. The gamma flip line is down here, the pink line. So I would encourage you, if you're a subscriber, to check that out. Every morning, I do it after the open usually. So sometime by 10 o'clock, this should get updated. All right, that's it for today. Thanks for watching. Let me know if you have any questions, comments. Go check out Dave Keller. He's got a great channel. And thank him for mentioning my name, if you do. That would be cool. And I'll talk to you later. Let me know if you want me to check anything out. Thanks, everyone. Take care.